Yo, what is going on, guys? Thank you guys for tuning in. We've got episode 46 of many. We've got a new podcast studio here. We finally finished it. I'm actually in Scottsdale here today, north of Scottsdale. We've got Scott Carpenter, very special guest. I'm in his home, so I'm kind of his guest, but today he's a guest on our podcast. He's letting us use his home. We've been doing some kind of like business talk, general kind of conversations and stuff, so it's been a good, productive afternoon thus far. Scott owns gyms as well. I met Scott about a year ago. He's kind of like my business mentor, a good friend. We've just been, over the past 8, 9, 10 months, Scott will hop on a call with me, once a month, every other week. We'll just kind of have conversations. I give him some insight on some things he's doing and working on. He gives me a lot of insights on things that I'm working on, and just kind of a really good business, friendship, relationship, kind of what we've been working on. So, again, we've got Scott Carpenter here. I would say my number one mentor, the guy that I kind of look up to the most in business, the guy that I ask the most questions. I fire him a text, shoot him a voice memo, which I started doing because of you. We just communicate quite a bit all the time. So anyways, we've got Scott here. Scott owns 6 gyms as well, all in like the Phoenix, Scottsdale area. But Scott's kind of recently taken a new path, a new thing that he's really focused on. He's kind of going more of like the general finance, general wealth building, helping primarily business owners, but everybody really just get their finances in check, whether that's like credit score, credit cards, life policies, term insurance, just like setting you up for success later in life. So I wanted to use today's episode to kind of just pick Scott's brain on general finance, general wealth building. I want to give you guys some insight. I know I've done a little bit of that as well, but Scott's much more of an expert than I am. Scott's been through a lot more, being 2008, 2007, 2009. So if you wouldn't mind, give us some background on kind of like that history of you, very brief, dive
Yeah. And I love business, but I love like doing the right things with your money, because I've been on the other side of it where I've been flat broke, and more than flat broke, because most of us have been broke at some point, right? Yeah. But I have actually been in debt, negative hundreds of thousands of dollars, and with really bad credit. And so I've had to dig out of a hole. I was very negative, not just broke, but more than broke. And so, I went to college. I got a degree in the corporate world. And I wanted to do the right things. I just didn't have the right knowledge. And so I did invest in real estate back in, from like 2005 to 2008. And then, of course, what hit right there was the Great Recession. So I was working in the corporate world, had kind of a standard corporate job out of college, making decent money, nothing crazy. And this was when everybody was buying real estate. Like that's what you did, right? And they were giving mortgages out like Tic Tacs at that stage. That was when all the crazy stuff was happening. And then, of course, to that late 2008, 2009 happened, and that came crashing down. And there I was in like my mid-20s, and I had 3 properties going to foreclosure. I faced massive depression because I'm like, great, I've destroyed my entire life by my mid-20s. And I would say humble, but that wasn't even it. I was like severely depressed at that point. I wasn't aware enough of myself to know that. I just knew I was defeated and I was embarrassed, and I didn't tell anybody because I was way too embarrassed to face my failures. And so I had to meet with a bankruptcy attorney, who made me feel like the biggest piece of garbage on the planet. And I decided not to file bankruptcy, and I decided to run from all my problems. So I moved. I grew up, my parents are both from Illinois. It's where I grew up. And I moved out here to Scottsdale, Arizona. And I nearly got fired from my job too, but I quit my job. I moved out here, decided to just start a new life. And so that's where I became a personal trainer. Fitness was like the only saving grace for me in my life at that point in time. It was the only thing I looked forward to. And it got me through it, and I did change my body, and it helped me work on myself, and I wanted to start doing that for other people. So I became a personal trainer out here. It's kind of how I started on that path anyways.
Sure. And yeah, so it's obviously I know a little bit more of the story as far as I've heard this a couple times, but it's interesting to kind of hear, it's important for our audience to understand all of that, because if you're going to come on here and just talk general finance, be the guru, I mean, like, you've been through it all in every aspect. It's not like you just started a business and were successful and made money and you're just like talking down to people. I mean, like, you've been at the bottom, the lows of the lows, and we'll say the highs of the highs. I'm sure there's still more highs to come, but you've kind of been living it all. So I think that's like the most important thing when you're going to talk to somebody about finance and understand it. Don't listen just to like the rich guy that was born into it. Listen to the guy who's been through it all,
Yeah, it's like easy for you to say. You've never had any problem, and that happens all the time. Right. And everybody acts like they're infallible here and they're perfectly logical and they did everything perfect. It's just not how it is. I mean, some people, but they were born into knowing all this stuff. It's just different. It's hard out there, and I get it. And man, like, I ran from my problems so bad, and people need to hear this for those that are going through difficulties too. Yep. I couldn't face it, and I don't know if anybody knows what happens when you stop picking up your mail because you don't want to look at all the bills and all the money you owe, but the post office holds your mail then. And meanwhile, internet marketing, because they're so good at knowing who you are, you'll be listening to Pandora, and you'll be reminded of your failures all throughout I'll be driving to work and you can listen to Pandora. I'm like, are you over X $1,000, $20,000 in credit card debt? Are you behind in filing your taxes and paying your taxes? It's just everywhere.
They've been listening that long, huh? I thought this whole,
I know. Cause this is like back in the day, right?
Yeah.
It's been pretty wild. And, it was nuts, but I remember when I finally had enough and I had to face the problems. I had to go into the post office and pick up multiple corrugated boxes full of mail and open it one by one and sort it out between credit card judgments and foreclosures. And like, it was bad. And then I had to create a spreadsheet, and I'm like, I'm digging out of this. And you can settle some of those debts, by the way, guys. You owe $10,000 in this credit card, and it's gone to a credit card collection agency. You can actually settle for less and negotiate it. But I had to do all that. And then I eventually just started chipping away. And I finally got out of it. And then I had to learn how to repair my credit, because my credit was just destroyed.
I was going to say, so let's start with that part of the story. Like, I don't know if anybody's in our listeners, I don't know if they have an extreme story like this, but because I kind of talked a little bit about credit cards and building your credit score and how to manipulate credit cards and use them for like better rewards or, whatever, getting your first credit card, like all that stuff's extremely important. So if, let's take your example, your story, what are like those first steps of getting out? Obviously, like admitting I've got a issue I got to deal with is step one, but like, what is the simple steps of like, maybe not $200,000 or $300,000, but say $5,000, $10,000, $20,000, repairing my credit? Like, what steps do I take? How do I go about, just doing all that kind of stuff?
Yeah, it can be slightly nuanced, right? Depending on your situation, what you have exposure to. But in general, you got to get the stuff on a spreadsheet and track it. And yeah, you've got your minimum payments on things, but really the credit card debt is what you want to get out of fast, right? Because that's usually 26, 28% APR. And so you want to start paying down. There's a couple different schools of thought, but you want to start eliminating some of those balances as fast as you can, and then rolling what you're saving into the next one. So you want to start paying down that early. If your credit score is high enough, you can get a credit card with a 0% balance transfer and open one up and shift the debt over into that. And you might get 0% for 12, 18, 20 months. And then you can pay down way faster because that credit card just accumulates fast. But the thing is like, I know it might look like a lot, but if you really go after it pretty quickly, it doesn't take that long to do it. And when you're out of it, you'll feel so damn good. And then, of course, you got to live within your means on it, too. The only way I was able to really do it is like I had to live a little bit meager. Now, I don't mean to forgo everything that you know and love. I still want you to spend on the things that you value a lot. you shouldn't sacrifice your fitness. You should have your gym membership. Like, absolutely. That's the only thing that got me through all this, right? You need to spend on those things, but, you know, do you really need the new car? Do you need this? Do you need that? Not all the time. And I want you to have all those things. I don't want you to live small. But what I want you to do is do it where you're not so worried all the time. You know, and I see that with people who start increasing their income. They're making more, they're more successful. It happens with business owners. And their level of spending rises in proportion all the time. And the minute anything bad happens, you're in that stressed period, you're in that anxiety, you're in it where you're going into debt too. So you've got to really learn to live within your means, you know? And I don't mean that forever though.
Yeah.
Because I want those means to expand, but you know, I had to get out of that debt. And once I did that, what I didn't get into was immediately expanding my cost of living. What I did is I started socking that money, the money that I was not paying towards the credit cards and the debts and the judgments and stuff, then I started putting away for further investments. And that allowed me to get ahead, where now I've expanded my means and I'm living in the house that I want to live in. We're driving the cars that we want. We're taking the vacations that we want.
Yeah.
So delayed gratification is very important.
What do you, so let's say, you know, we've got some listeners who've got like a 450, 500 in their credit score. And I've got another question I don't want to forget too, so I'm just going to, minimum account, minimum payments, explaining that on like I believe, we'll talk about minimum payments too, but let's take an individual who's got a 500 credit score. What do you do, like 2, 3, 4 things? Like, what do I do to get that up fast?
Yeah.
How do I rebuild it? Like, I know you can call some credit card companies and kind of get some of those things what do we do?
So there's basically 3 credit bureaus that report on your scores. Not all of them report the same thing, but there's TransUnion, there's Equifax, and there's Experian. You can check 2 of those for free and look at it if you just go to creditkarma.com.
Yep.
You can see it. And so you might have some derogatory marks on there. Some come from late payments. Some stuff you might not know about. Like I was talking to a gym owner and he had some $50-something thing in collections. He had no idea where it came from. I'm like, it's probably fraudulent. It could be some medical bill from 5 years ago that you never got the envelope for, right? But what you want to do is try to dispute those. Even if it's valid. It's not you're being dishonest about it. Like, it's not mine when you know it is. You can say, hey, I need you to verify that this is a valid debt. Because there are certain legal requirements that they have to fulfill in order to do that. And if they haven't done everything by the book, you get off on it. They have to remove it from your record legally. And so I was able to take a couple things that just were stricken from the record. I didn't have to worry about paying it, like a credit card collection or whatever it was. And that got removed. And so if you can get a derogatory mark off of it, it helps out tremendously. And I believe I negotiated a couple where I'm like, I will pay this off, but I want you to take off any record of it. Now, you need to get that stuff in writing, for sure. But the way you dispute it is you go onto those 3 different credit bureaus, and you can log on and just dispute it online, the validity of it. The other thing that you can do is you can just Google a form for it, like a credit card dispute thing, and you can also send it to the creditor to dispute it with them, because they're the ones reporting to the credit agency. But if they didn't follow the rule of the law to the letter, legally they have to take that off from so you can attack it from the credit side and from who the creditor is, the credit reporting company and them. Now, when you do that, pay I don't know what it is, 75 cents to do it through certified mail. Because then there's your evidence. They know that. Yeah. So they know not to mess, we never got your letter. No. You sent certified mail. They know you're not playing around. Yeah. They know they're in deep crap if they don't take that off. Yeah. So a lot of times you can get, even if it's legit stuff, you can get it taken off from your credit report. And I mean, this guy, he saw his credit score go up by over 200 points within like 30 days. Within 30 days. Yeah. The other big thing that can have your credit score jump is your credit card utilization rate. So whatever the limits on your credit cards are, let's say you have 2 cars and it's together they're like $6,000 limit. If you keep that low, like 20%, even 10% or less, it can bring your credit score up by 60, 80 points.
And that's saying like if you've got a $6,000 limit, we're talking a 10% utilization. That means $600.
Yep.
Now for that specific utilization rate, 10%, 20%, we'll just use 10% for simple math. That's $600.
Yep.
Would that be in my statement balance?
Your statement balance. So let's say, oh, well, Scott, I carry, I usually charge $3,000 on it every month, but I pay it off in full.
Yeah.
Your credit score is still taking a massive hit, probably 60, 80 points at that level. Because the statement comes and says you have $3,000 out of $6,000 on it. That's a 50% credit utilization rate. Even if you pay that off in full every month, that's what it reports, and it hits you negatively big time. So what you can start doing is paying off that balance or paying it way down before the statement balance hits.
Yep.
So instead of waiting, and I know it might take you a month or two to get ahead and be able to do that, but if you can get in the habit of kind of paying it off just before the statement period ends, you can skyrocket your credit score.
Right. So still use if you've got a big payment you got to use that. I mean, my model is kind of like I pay it off every Friday or something, right? Like I'm always constantly checking it. I'm keeping it low.
That's the best way.
But like if you've got a $6,000 credit limit and you got to go buy something for $6,000 today, that's fine. Just go back in tomorrow or 2 days when it actually hits your account and make that payment right away, just so it's not going to be there when the statement. So, and for those of you listening, your statement balance date is like July 15th. It's the 15th of every month, right? So it closes on like the 15th, and then it'll be, your statement. There's like a lapse, right? There's like it closes on this date, and then your statement balance as of the right? Yeah. Something like that.
It'll be like a 30-day period for your statement balance. It'll be like for all things from the 17th through the 16th.
Yeah.
And so the minute that 16th happens, it closes it off. And then you get like a good almost 30 days to pay it.
Yeah,
right. But yeah, if it's especially important if you're trying to do something and you need your credit score higher, because you can bump it up a lot.
Yeah.
If you're shopping for a home or a big loan, or you're going to apply for another credit card to increase your limit, right, which then will decrease the overall balance, you want the best chance of being approved. You're getting the best rate.
Is it important to show some balance? Like for me, if I pay it off every Friday or every other day, let's say, and I've got a 0% utilization because I just is that?
Nope. You're totally fine on that.
Like that.
I read that back in the day, like, oh, you should have, you don't need any.
No.
But it's almost impossible to get zero.
Yeah.
Because when your charges hit, you got gas the day of the statement, right?
Yeah.
But you're totally fine if it's 0, 1%, not a problem.
It's okay. Okay.
It's okay. But it affects your credit score in a big way, and it can be make or break. And don't listen when Dave Ramsey says never use credit cards. That's stupid.
Yeah.
It's stupid because now it's a double-edged sword. It's like saying never use a knife. Well, you could cut yourself with it.
Right.
No shit, but they're also very useful to like eat and things, right? So you want it's so dumb not to use any credit. The same guy that I was talking about, he's got a net worth of over $1 million. He's got a fully paid off home, but he's also growing his business and needs access to capital. His credit score sucks so bad because he's purchased everything with cash, and he had like 1 or 2 derogatory marks, which we were able to get off. But he was a ghost for creditors.
Yep.
So the minute you need a car loan, that you're not getting the best rates. The minute you need a house loan, he couldn't even get a home equity line of credit on his house because his credit score was so bad. And he owned it free and clear and had great income.
Yeah.
So like these are life skills, and you can use this to get ahead, whether you're buying your home or a vacation home or commercial real estate or whatever it is. And the other thing is you can get if you play the game right, you can get 2% plus back on all your purchases.
Oh yeah. The rewards alone,
which is free money. Yeah. Like it's so dumb and you get extended warranties on stuff. Yep. Right? I get free insurance on my phone. I don't have to pay Verizon, 10, 15, 20 bucks a month on it. Right? So you play the game right. There's tons of perks.
There's a lot of stuff like that, like Disney Plus and like Walmart, whatever the premium Walmart services
Absolutely.
Too. Yeah.
It's dumb. Like Amazon. Yeah. Amazon's 5% back.
Yep.
You know how much that adds up?
Yeah. And how much money do we spend on Amazon every year?
Oh my God.
So 5%.
Yeah. I mean, my wife has 15 packages a day sitting outside, you know? So it's just dumb not to do it, but you got to learn how to do it responsibly, right?
I mean, I think going back to like the Dave Ramsey comment is like, it really comes down to like, be aware of like what you're spending. Like, don't be afraid to open up your credit card app. Don't spend money you don't have is like the biggest thing, right? No, be aware. We're not saying you have to check your bank account and your credit cards every day. We're not saying you have to be crazy money gurus, but at the same time, just understand how much money you have and don't spend more than that, right? Like it's not that hard.
Just like you're doing is how I recommend to most people. And you go in there, you pay off your credit cards every week.
Yep.
That basically lets you treat it like your credit card, like a debit card.
Yep.
You're respecting it as you're spending the cash. The problem is with some people in credit cards is that it's not real money.
Right.
You know what I mean?
Right.
And so if you go in there and you take your credit cards and you earn all the points and get all the perks, and you go in and like once a week, you just pay it off in full. That's the best practice ever.
Right. And then you just and then you're aware by doing that because you're just keeping an eye on it and it's
correct.
It's straightforward. I know a lot of people, you know, you go out to the bar and you buy a round or buy 2 rounds or buy the night or whatever. And it just, if you're not paying attention, it can add up. Like I'm aware of that. Like we're all aware of that. But I think one of the other problems too, I was like my parents' generation, you know, kind of like when credit cards were like coming out and being like a thing, they were misused and abused and like, you know, just a lot of filing bankruptcies and closing credit cards, you know, just all that stuff so I feel like a lot of like people my age, a lot of our parents are saying, hey, don't get a credit card, only use a debit card, spend the money you have. But again, you need credit score. Like I'm a big proponent on that. So
it's part of the game. You know, you need a good credit score to buy a home. Period. I mean, you're not going to wait and save it to buy a home in cash.
Yep.
It's just not going to happen.
Yep.
And in some cases, you're going to need to do that for a vehicle, or it's smarter to do it rather than pay cash in certain circumstances, right?
And one of the other things too on a credit history is important, right? Like I mean,
massively important.
And so I tell all my friends and family, like, if you're 16, 17, 18, make sure your parents get your credit card now because in 7 years, you're going to be thanking me. You know what I mean? Because it's the 7-year mark is like the ideal. I mean, credit history length is important as a whole. But so get a credit card early. Use it. Even if you want to still use your debit card, go ahead. But get your credit card, and I guarantee somebody's got a subscription for Spotify or Pandora, iHeart, whatever it is. Just put one subscription on it, or make it your gas card and just use it for that.
Yeah.
You don't need to go nuts and only use your credit card for everything. I do. There's no debit cards. They're probably the worst tool in the world.
Yes.
All they do is charge you ATM fees when you want to, you know what I mean?
And their protections are terrible.
Yeah.
If there's fraudulent things or whatever, it gets stolen, it's really hard to get your money back with debit cards quite often. But with credit cards, it's really fast.
There's been things that I've approved that were like a scam, like it was a scam or something, right? In business, like a $500 advertising thing.
Yeah.
And I approved it and I screwed up and like I signed up for the scam basically, but I just reached out to Amex. I'm like, hey, I don't know what this is. Get rid of this. And they're like, done. You know,
Amex is amazing with that stuff.
Yep.
They're really amazing with it.
Yeah. So I want to go back to my question. For those of you who carry over balance, you have a statement balance of $500, $1,000, whatever. What's the difference between the minimum, because you have a minimum payment that you can make, and then there's like the statement balance, right? What's like the difference there, and what aren't people understanding? Because I feel like I know the answer, but I want to hear.
Yeah, the minimum payment. So like whatever you owe in total, say it's $2,000 out of $6,000, right? Something like that. The minimum payment on a credit card bill is small. That's the minimal viable payment you have to make in order for them to keep in good standing. And it's small. It would vary between the credit card issuer, but it could be $30 to $50 a month. And credit cards have very high APRs. So you're looking at like 26% or something, like say 28%.
Or 27.9, yeah.
So let's say it's at 26%. That means in the course of a year, if you owed $1,000 balance on it, I mean, you're going to pay $260 in interest,
right?
And not even pay down your balance. You'll still owe the $1,000.
Yep.
And so credit cards have a very ridiculously low minimum payment, right? Which virtually guarantees you're never going to pay this thing off.
Yep.
Which is the most profitable thing for these credit card companies. And so you're just not getting out of that hole. And the problem, this is where people get into trouble with credit cards, is, well, yeah, I bought this $900, right? I spent $1,300 on the newest iPhone, even though my iPhone is like a year old.
Yep.
But I wanted the newer camera.
Yep.
And I spent $1,300 on this. But yeah, but I guess they finance it through Verizon or wherever. Right. But let's just say you bought the MacBook, right? You have a 3-year-old laptop, but you're like, nah, let me just get the new MacBook for $1,800. And they're like, well, yeah, but it's my minimum payment, like with everything, it's only like $35 a month. Yeah, but you're going to pay like $6,000 for that laptop.
Right.
I mean, it's ridiculous. So the minimum payment is set really low on your credit cards, which is why people can rack it up, because it might only go from, you could spend an extra $4,000 and the minimum payment goes from like $35 to $55.
So if I have $1,000 on my credit card so what I do is all my cards are set up no matter what to pay the statement balance every month, right? Because then I have $0 carrying over. But for this sake, if I have $1,000 on my statement balance and I'd make my minimum payment of $30, the rest of that remainder is going to then take on some of that APR, the 27%, right? So my minimum payment was $100. I've got $900 left on my credit card, basically from the statement balance that I did not pay. Now that $900 is accruing basically interest in the credit card companies now making money off of us, right? So the most important thing is pay off your statement balance in full every month. So that way we're not giving the credit card companies just free money, basically, right?
Exactly.
We're not digging a deeper hole or, paying more for the stuff that I already bought, right? Like why?
Yeah.
So I always think that's interesting because I feel like a lot of people, when you get a credit card and you go into the app and you set up like your auto payment, you can click minimum payment or you can click statement balance. Always go statement balance. That way, if you forgot to make a payment on that last Friday, that account just gets wiped clean back to zero.
Yeah.
And then obviously keeping that statement balance less than 10% of that is important as well.
Yep. And I'm a big fan of always, even though I'll pay more frequently, like, I pay pretty much like once every week or maybe every 2 weeks if I forget or something, like just like you. But I will always opt in for the auto payment on it, because if you forget, you don't want to forget. They're going to slap you with penalties and stuff like that, but that's the least of it. If it damages your credit score, that's the stuff that could hurt your score for the next 7 years. Right.
And so one of the other things too we were talking about earlier, we'll kind of hop off this credit talk because we've got some other things we want to talk about and we don't have a ton of time, but where was I just going? We were talking, so derogatory marks and stuff like that. If I miss a payment and I'm now trying to clean up my credit score, but I've only missed like one or two like ever, it's very easy to call the creditor, what I call Amex, if it was Amex, who do I call to get that? Because if I've never missed a payment and I've missed one, it's super easy just to call. I've done it on my Chase card. I missed one like when I was like 20 and I was pissed because I never missed one yet.
Yeah.
And I was like, so I called and they're like, we'll waive it this time, but how does that work?
Yeah, because they basically will report to the credit card agencies when you're late. If you're late, but within 30 days, they don't report it. If you're late for longer than 30 days, that's when they report it.
Gotcha.
But it is easy to do. You know what I mean? It is easy to like set that letter aside, like, you know what I mean?
Yeah.
And that's why I always do the automatic payments just as a fail-safe, even though I pay manually. But it's a fail-safe to make sure. But it happens, right? And so at the end of the day, if you have one of those on, call the credit card company and ask nicely. And if your credit report is pretty clean otherwise, or you have a really good history with them, you might get them to change that reporting.
Yeah.
If they do not, then you could try to dispute it, right, with the credit card company and try to dispute it with the credit bureaus. But if those fail, it's going to be on there for 7 years.
Yeah. Yeah, and I feel like one of the other tips I learned too is like if you're dealing with somebody that's usually those credit card companies have really good customer service people and stuff like that. Treat them like a human, just be a nice person and have an honest conversation.
That's it.
That's like a huge key.
That's it. Yeah.
If for some reason you've got that customer service rep and they're like having their worst day, be nice to them. If they don't help you out, don't be afraid to call back like 10 minutes later and just try to get another rep and have the conveation again.
That's actually a great piece of advice. Both of those.
Yeah. Treat everybody with respect and be a kind human, but you're not going to get the same agent twice, right?
Yeah.
So
think about it. You're on with an agent this is their 50th call that day.
Yep.
Right? Most people hate, the menu systems in this. You're like, operator, get me a human. You're yelling at this auto system. Yeah. Right? So everybody's pissed off by the time they get to these people. And if you're just completely rude to them, even if they could help you out, what would you want to do in that situation? Yeah. I'd be like, I could help you out, but you're kind of an asshole. I'm not going to do that. Right? And so be kind and be like, hey, I'm kind of freaking out. I've been responsible. That's 6 years, but I found this on there. I don't even know how that got on there. That was 3 years ago, and I've had this car for 6. I've never missed anything. Is there anything you can do? Like, I think this might be an error. I don't know though. I mean, is there anything you can do? And I'm just really freaking out over here. You know what I mean? Yeah. Because this is just really important. I'm looking to buy a house, whatever it is. And be nice, be kind. Yeah. Ask for a favor. Like, is there anything you can do to help me out? Yeah. Is there any, and so just be nice about it. And again, different people will react differently to the same problem. So try calling back. You're going to get a different rep virtually every time. Yep. And try again, right? You could ask to speak to, is there anybody like, a supervisor who has the authority to do something like that, So just try, but be nice first, right? Yeah. Now, if it is a legit wrong thing, be nice first and then be mean if you need to. Right. They'll have to take it off regardless if there's an incorrect thing. But, be nice with it for sure. Yeah.
Yeah, I remember hearing that a while ago, and I haven't had to call in much because I've kept my stuff pretty clean, but I also don't buy sketchy stuff, so I don't have to deal with like the scams and all that kind of stuff. I'm not on those weird websites that other people might be on.
Scams are everywhere.
Oh yeah, well even holy cow, like gas station stuff too now. Like the things they can put over that just to steal your credit card information and stuff. It's insane. Yep. Well, cool. I think that was a pretty good wrap on like credit. I mean, there's a lot we could talk about credit for a long time. I feel like it's something that everybody needs and everybody needs to understand more. I don't think a lot of people take it seriously. I'm also a big proponent of multiple credit cards. Do your research. If you like to travel, if you like to, if you get gas, if you like to go to restaurants, if you shop at Amazon, all of us have habits that there's certain credit cards that can really benefit that type of just
go to nerdwallet.com.
Yep, NerdWallet.
And you can search for whatever you're looking for, analyze the best ones and apply for it.
Yep. Yeah, because I mean, if you're again Amex, if we're shopping at Amex, we've got the Amazon business card or the Amazon, whatever, 5% back. So just kind of do your own research on that stuff. I think it's very important. If you have any questions, shoot us a message, and we'll definitely help you out there. But let's talk about. I kind of want to give the listeners a little insight on like retirement options, and like I know we were talking about like term insurance earlier. What do I do if I'm just a general employee and I'm making some money? I feel like if we take those shoes and my employer offers me like a 401k, a Roth IRA, you know more about the stuff than I do. I don't know all the options, but for one, if they give me a couple options, what's my best option? But two, like kind of what's the ins and outs, things I should think about? I know a lot of businesses out there, especially like big corporate, they're going to trap you by giving you kind of like a 3-year agreement, right? So like a 401k will match, but you have to be here for 3 years to get our match. Right, and if you're not, then we're taking it back, right? So some of these things can be used as tools for the employer to keep Scott around longer, right? Like,
correct.
A lot of employers will do that, and I don't think a lot of people really put 2 and 2 together or realize that. So I just want to kind of think about those things and give some insight on that stuff. So wherever you want to take that.
Yeah. I mean, this is a huge subject too, because there's so many ways you can go about it. Yeah. But what I'm really passionate about is taking your income and starting to invest it so it starts to generate passive income, and you apply time with that, and it can be very useful. Now, there's a lot of different ways you can do that. You can do it with general stocks, bonds, and index funds. That's kind of what everybody talks about. Yep. But you can also do it with real estate. You can also do it with different things. But so let's keep it kind of simple. Like, the common thing out there talks about all the time is your 401k. Those aren't all they're cracked up to be, quite often. So there's the problem when it comes to IRAs or like 401ks and index funds is they are racked with so many hidden fees. There's a reason why Wall Street has so much money, right? And it is because they do have a lot of little things that just steal people's investments. And everybody needs to get paid, but the problem is some people get paid way too much, and it's so easy to do it because these are complicated instruments and not many people understand it. And there's just a lot of things. So you got to be careful with 401ks. If the match is pretty generous, there's no reason not to do it. If you ever leave that company, roll that over into your own traditional IRA. And you can just go to Vanguard.com and do it yourself, because those 401ks are riddled with a lot of fees. And I'm not saying never do it, but they're not all they're cracked up to be. And then you're right, sometimes they'll put golden handcuffs on you in order not to leave, which I get it, why they do it, and it keeps people. But if it's not really what you want to be doing with your life, I don't know how long you want to suffer in a job you hate just because of delayed things that you might get a little bit extra when you're 65.
Is that negotiable, you think? I mean, I assume it depends on the place,
Everything's
right?
negotiable.
Yeah.
Yep. With employment, everything's negotiable. Yeah. So you're right.
I feel like that's a good thing to think about. You get your employee contract or packet or whatever it is. We've got 3 years, and I don't want to sign a 3-year deal with you. I don't know you. Like we haven't even started this relationship, but I want my money. So I think it's a good thing to consider, right? Is have that conversation and see what you can do.
Definitely. And I mean, it would take me a long time to go in math and examples to really support for those that are like, this guy doesn't know what he's talking about. I get it.
Yeah.
Right? Because everybody is out there saying invest in your 401k first. Maybe. Yeah. The answer is maybe. And, it'd take me quite a while, then we'd pull up this. So I won't go into the weeds on it. But for your average person, like, control your spending for sure, right? Spend on what brings you value and joy in life, but like live within your means. And you want to sock the rest away. It could be in a 401k. They don't give you many investment options either. But, a really good thing is a Roth. A Roth is going to be, you don't deduct it from your taxes. But it is tax-free wealth forever. So people don't realize your 401ks and your traditional IRAs, they're getting taxed when you withdraw it later. And so it depends on your unique scenario. Sometimes there are reasons to want to reduce it from your tax burden now, and sometimes they're not. Right now, with all the tax cuts that are happening and the tax credits and all that kind of stuff, taxes under the BBB, right, the Big Beautiful Bill, are likely going to be lower than they are in the future. Nobody knows for sure, but they're likely to be lower, in which case all signs point to a Roth is probably better than a 401k or traditional in many instances.
I do feel like it's difficult to, again, dive too deep into one or the other because everybody's situation is different.
It is unique. Yeah.
The best way to give advice is basically to look at the picture of that individual, what their lifestyle is like, the job that they've gotten, the offer that they've got.
Exactly.
So,
the pundit, you're exactly right. The pundits will all say, always do this, never do that.
Yeah.
Right? This is good, that's bad. And that's it. Yeah. And listen, that plays well on radio or podcasts or whatever, right? But personal finance is personal.
Yeah.
I recommend completely different things to who I'm talking to based on what their income is, how stable, do they have a family or not, what their financial situation, what their goals are.
Right.
I mean, some people want to get into real estate investing or start up their own business. You can't throw lock all your money away in a 401k or IRA when you're going to need that to get started.
Yeah.
Right. And so we have to have a different strategy.
Yeah. 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 I think that's exactly, and I have a hard time, I don't try to give, when people do have a conversation with me, I'm not trying to steer in one direction or the other because it's all personal. It's all individual.
Definitely.
It all, we really have to sit down and have a conversation to help you and decide what your best path is and what decision's best for you. I think the biggest thing is be careful on the contract that you're signing. Make sure you understand what you're signing. Just make sure when you're reviewing the benefits package at your new job or whatever it is, just make sure you really understand what you're reading and reach out to somebody who's maybe got more financial education than you. It's all catered to you. It's all individual to you, but it's important to understand really what those benefits are. You know what I mean? Like
it's easy to get really oversold on the benefits.
Yeah.
And myself as an employer, I'm not a fan of 401ks. Knowing how much they cost, the hidden fees behind stuff, and how much wealth is going to be taken from me as an employer and you as an employee, dang, like it's not the ideal investment path for me to offer or me to even receive. And so, but again, that doesn't mean it's the case. Like some matches and stuff are very generous.
Yeah.
Right. Others is like, don't do it through the 401k, just do it through your own IRA. You're going to get way better options. You're not going to get robbed of all that stuff. So it's really different strokes for different folks on it.
Yeah.
Who are you? Where are you going? All those things, right?
Well, what are two or three things that everybody could benefit from? And one, high yield savings, right? High yield savings versus like a savings account. Definitely need to touch base on that.
Yep.
I've never had a savings account, like an actual savings account, like the traditional. I have a savings account. I only have checking accounts. Savings accounts, correct me if I'm wrong, were really a big thing years ago when they had basically what the high yield savings is now, right? Like a savings account was originally created and like you'd get a return on it, right?
Right.
I could set money in there 40 years ago, and if I had a certain amount, like I could just make some passive income basically off my savings account. Yeah. Now a savings account is like what, 0.01% or 0.1% or something?
Oh yeah, it's like 0.1%, and the bigger the bank, the worse the terms. Yeah. You know, Chase, Wells Fargo, U.S. Bank, they pay you nothing.
Yeah, it's crazy.
Nothing.
Yeah.
It's nothing. Because they're so big. Why would they?
Yeah, right.
And so one of the first moves I have people make, and some people are sitting on way too much cash. And that's okay. But like, you need, that cash is being eroded by inflation.
Yep.
A lot in the last several years. You need to at the very least, and I have people do this right away, open up what's called a high yield savings account. Just Google HYSA, right? And you can get it through ally.com, ALLY.com. Amex has a good one too. Yep. There's several out there, but yeah, Chase, Wells Fargo, they're going to give you 0.1% interest rate and dump it in your account. Nothing. But right now you can still get like 4%.
Yeah, I think mine's at like 3.75. I think it's
they're all varied. That's more most of what most are at right now, 3.75. It varies with the market, right? So it'll go up and down. You know, when interest rates were higher a year or two ago, it was doing like 4.2 or something like that, right? So it's going to go with the market. But bottom line is if you had, you know, $100,000 and you have it in Chase, they're going to give you $100 a year to keep it in there. But if you put it at yours at 3.75%, right, they're going to give you $3,750 to hold that same amount of money.
Right.
So it's just like, don't keep all your cash in these crappy savings accounts. Checking accounts are crappy savings accounts in these big banks.
Yeah. So there's no risk to a high yield savings.
None.
What the worst it can be is 0%, which is probably very rare. It probably never gets down to 0%, I would imagine. But the high yield savings, there's no risk. It's not like it's invested in the market. It's not like invested in stocks and bonds and that kind of stuff. It's just these large, like the Amex, like they're paying you to like use your money, basically, right?
Yeah,
like
it's no bank. Different than where your money already is.
Right.
It's just in an account that'll pay you more.
Right.
So yeah, it's not being invested in any markets. Nothing. There's no risk to it.
So if you want to have a high yield savings, like what I've learned is, if you have a checking account, let's say you like to have 5,000 in your account, 10,000 in your account, that's like your happy amount. Like it feels good when you look at your app. You figure out like what you really need in your account. Say $5,000 a month is what you need, and you know how much you're getting paid. Like you've got that amount. Anything over that amount should just be cycled into the high yield savings.
Yeah.
The high yield savings isn't to be withdrawn from like daily, weekly, monthly. The goal is to move money there, let it sit there, and then in like 3 months or 6 months, or like you're not really supposed to just like be taking money out of it. I think a lot of them have rules where like you can only do like 4 withdrawals a month or something like that, right? Like there's like a withdrawal limit. So it's not to be used like a normal checking account. It's used to be a savings account. It's used to put money over. It's used to let the money sit. And then if something comes up or you're saving up for that house or that wedding, you can pull it out.
Yep.
Now those gains are taxed. So 3.5%, you know, you're making on your high yield savings, you are going to pay tax on the gains, right?
Correct. Yep.
But again, you're fighting inflation. It's free money. It's money that you weren't going to spend. And if you're anything like me, anything like most people, the more money you have in your checking account, the more willy-nilly you are when you're spending money, right? You're like, well, I checked my account, I got 10 grand. Like, I can go buy those shoes because I don't care. If you have it, you spend it. So out of sight, out of mind. Get like Amex or Ally or whatever you want, an app that you wouldn't normally open, and get it out of sight, out of mind. Just put it over there and don't touch it. That's step one that everybody should be doing, is having a high yield savings. Now, even if it's $100, $200, $500, it's a start. It doesn't matter.
Yeah.
You're not going to spend it now that it's not in your checking, right?
Yeah, absolutely. And I like it, like you said, in a different bank, because you just don't see it when you log in all the time, and you're not tempted to spend it. And so it's like determine how much you kind of want to sweep aside. You know, I call it, that's the sweep account. And depending on what your living expenses are, like, you just get that transferred every month from your checking, wherever your money comes into that savings, high yield savings account. And you don't miss it then, because it's not there. Yeah. Like, it's in and out. It's not even there. And you set it aside. So it's a way to kind of force yourself away into savings. And yeah, it can be used as an emergency fund.
Yep.
Or yes, it's that savings account to do that car purchase, that home purchase, or whatever it is.
So high yield savings is across the board, like, one thing that everybody needs to be doing.
Yep.
I get it if you're tight on funds and that kind of stuff, but I mean, I think you can even set up like recurring deposits to it. So if you wanted to, you could do $5 a week, $20 a week, like, use it as a true start with something, I guess, is kind of like my, when I meet with my staff, my guys, and I'm trying to help them long-term, just start with something, like the act of doing.
Absolutely. You can set something up where it's twice a month when your paycheck comes in.
Yep. Yeah. Right.
Even if it's $100, right? And you can set it up where it's automatic recurring and just goes.
Yep. You don't got to think about it, out of sight, out of mind. I think that's a big one. So let's talk about, we've talked credit cards, very important stuff there. We've talked high yield savings. We talked a little bit about, it's hard to get too deep into like Roths and 401ks until you start getting opinionated, and it's hard without viewing their situation. So let's go like on like the insurance sides of things, because I know that's also kind of like another one of those potential employer, potential like you want to set something up. You've got a family, you're young, you don't know what to do. I don't know a whole lot about like all the difference. You know, we've got life, we've got whole life, we've got term. Yeah, a lot of it's mumbo jumbo. It's hard to understand what for the general person. 20 versus, you know what I mean? Like there's age, there's depending on how old you are, it's important too, right?
Yep. Definitely. And there's a lot we could get into. So we won't talk about whole life tons. That's something that I do a lot of, and you do a lot of, because there's a way that it can kind of be like a better high yield savings account in addition to provide. So we won't get into that tons, but life insurance is one of the first things anybody needs to get. If you're younger, you can look into getting a whole life policy, and you can do it when you're older too. But if you're younger and you don't have a family yet, the death benefit of life insurance isn't that important. But if you have a family or you have dependents, it is one of the first things you need to make sure. And it's weird because I'm 42, but it's this weird thing where I'm seeing, I've known so many people that have died that are my age, I grew up with, and then even in the industry, gym owners.
Yeah.
And what is one of the first things that happens to these people is there's a big GoFundMe, because especially if it's the primary breadwinner, but even if it's not, and it's two working parents, there's two working parents for a reason typically.
Yeah.
And somebody dies, that is a massive strain on your spouse and your kids. And so if you have dependents, life insurance is one of the first things you should get. I've seen it happen too much. And so I have, in that case, the first thing you do is get term. Term insurance just means you're going to be insured for 20, 30 years, something like that. And it's very cheap. That's the good thing. So like if you wanted to get $1 million policy and you're in really good health, it might only cost you $50 a month. And if you died, that's going to go to your dependents tax-free. And they just, it can pay off the house and it covers all that. Your spouse is going to be a wreck. Your kids need to be taken care of, right? So that's a good place to start for everybody. Term can be really cheap. $500,000 is going to be like half of that, right? But that would go such a long way.
Yeah.
Because, man, I've seen families it's so hard, and it's going to be hard enough on the spouse when your spouse dies.
Yeah.
And now you've got to raise the kids and work and not get foreclosed on and you name it, right?
So if I'm 20, not necessarily, but if I got like a family or depending on with age too, right? Like that's when term you'd kind of want to.
So term is when you have dependents and you really want that.
Okay.
Now, there's also something called whole life, which you'll hear like Dave Ramsey say, never do that.
Yeah.
That's not the wisest thing. Now, is it for everybody? No. But whole life is permanent insurance. And so should you have a family eventually, like you're going to be golden, you're going to have that, but you can build these policies in a way that they're going to accumulate a lot of cash value. And it's almost kind of like a high yield savings account in a way that's going to earn great returns completely. And it's going to be, you're not going to get taxed on it every year. And you can still access that money. And it doubles where you get all the life insurance too. And so this is good if you're older and have a family. Like I got a big whole life policy on myself for the benefit of my family. And then again, it accumulates cash value that I get to use for other things. And I use it for retirement savings for me too. If you're younger, the power of time when it comes to a whole life policy is insane. And you look at how that cash value can grow over 10, 20, 30, 40, 50 years. It's nuts. Now, is it the right move for everyone? No. Is it more complicated? You know, are there things I would have to explain to somebody to see if it would be the right thing that I don't have time for here? Absolutely.
Yeah.
You know, and there isn't. Personal finance is personal. I recommend vastly different things for people in different situations. Yeah. But it's man, life insurance is the crux of like, well, there's a great book on it, right? It's what would the Rockefellers do by Gary Gunderson. Yep. And he kind of talks, it's such a great wealth preservation strategy for people to hand down, especially to multiple generations as well.
It gets into like trusts and all that kind of stuff, right?
Yeah.
It gets real.
That's the secrets bank, of the wealth. Yeah. It's kind of whole life done the right way is kind of referred to as the rich man's Roth.
Yep.
And so because there's no limits on it when it comes to, there are a lot of limits on your Roth IRA. And so it's just a very clever way to have awesome insurance and accumulate cash value over a long period of time that just is good for a lot of people.
So I do want to add too, like your Roth IRA, a lot of these things actually, like age, the younger the better, right? Like
yes.
Because of like the long-term compounding, like the growth opportunity there. I know when I was in college for the one semester, I kind of went, my freshman class, like that intro, whatever it is. Mm-hmm. If you started a Roth when you were 18 versus 21 versus 25, like the vast difference on like, if you were 18 and only put $1,000, you know what I mean? Like
it's
if
huge.
You look at it, it's just a huge difference. So those of you listening who are younger and don't have anything going yet, definitely sooner the better. It's going to help you long term, every day, every year. Like that aspect counts in that long term gain there too. So I assume that probably goes for most investments. I mean, I need those long term
all investments. Plays. Yeah, it's compound interest is insane.
Yeah.
But it takes a while for it to kick in, and so the sooner the absolute better.
Yeah.
I mean, I'm kicking. I mean, I ruined my credit and destroyed all my money throughout my entire 20s.
Yeah.
I had to rebuild all that stuff. So I didn't start getting into it till the 30s, which is still relatively young for when most people start considering it.
Yeah.
And if you're in your 40s and 50s, don't worry. Like you still have time to make things up, but you want to move faster.
Yeah.
But man, like if 42-year-old Scott could give 21-year-old Scott the information he has now, oh my God, it'd be unbelievable. Unbelievable,
Let's so we'll wrap this up, but on that note, something I'd like to ask some of my guests is like, if you could give yourself one piece of advice, right, to your younger self, something very impactful, whatever you want to do with it, like what's one mega piece of advice? We're talking wealth. If you want to talk wealth, that's cool. If you want to talk just like, if you're talking to younger Scott, 18-year-old Scott, what would that like one piece of advice be to you? You know what I mean?
Oh my God, I have so many. I was such an idiot. I think I would go the wealth route, yes.
Yeah.
Right. And talk about that and show that, because it's like, whoa, right? But I think my early years, I didn't go for it. I didn't know what I want to do or how to do it. I didn't know how to get into business for myself. I didn't know how to pursue different career paths, whatever it was. And so I just accepted the 1, 2, or 3 choices in front of me, right? Went to school and graduated college. I only interviewed at a few different places, picked one of those jobs, and then I was miserable for 4 years in that job. Instead of, well, why don't I go out and look for a better job or do something different? It's because, well, I don't know where to look. And I stopped there. It's like, figure it out.
Yeah.
And granted, the internet wasn't what it was then as it is now. You know what I mean? Like, there's more information freely exchanging and everything now. But pick up the phone and talk to somebody. Like, just start asking questions. Like, that's why I love talking to you so much. You've done so much, and like, you're in your 20s. You know what I mean? And you're getting exposed to bigger and bigger things. Why? Because you're around people doing bigger things, and you're asking questions, and you're learning, and you're soaking it in. For like the first, however many years out of college, I didn't do that.
Yeah.
I didn't even need to go to college, but like, the people who are kind of where you're at or where you want to go, like, talk to them. They will happily talk to you and share their journey and their stories and where you might want to look, or the book that's going to introduce you to the amazing idea, right? I didn't do any of that. I just accepted the options in front of me for too long anyways, right? And until I questioned it, and then I decided to go my own path.
Yeah.
So I would tell myself to do that way earlier.
Yeah.
Way earlier.
I like it. Yeah. Well, we're going to leave off on that note. I appreciate you letting us use your home here, your humble abode, to let us record a podcast. I've had fun this afternoon. I know we're going to go out and grab a bite to eat, maybe some margaritas apparently. So thank you for hopping on. Thank you guys for listening. Hopefully you guys got something out of this, a little bit of financial wisdom, education. I think Scott and I are going to do some virtual stuff in the future. He does virtual podcasts. He's got his own podcast as well, which is
The Profit Lifestyle for Fitness Entrepreneurs.
Okay. So, and are you still, and I don't care if the answer is yes, is your podcast still primarily like fitness, or is it like more?
It's for fitness business owners, but I will be starting a new one just called The Profit Lifestyle very shortly.
Okay.
And it is going to be on what to do to increase your income and how to turn that into indestructible wealth.
Yeah.
A lot on these topics. Yeah.
Cool. Yeah. So whenever that comes to be, maybe you and I do an episode and kind of like kick that off too. I mean, just kind of let everybody know what's going on there. But hopefully you guys got something from this. If you guys have any questions, again, email us. I should probably change this email too. I don't know if I love it, but our marketing at Fitness Grizzly, maybe that sounds kind of like marketing, like you're signing up for something, but maybe I'll change it to G, the producer, or something, because he's the guy who manages that email. But if you want to add me on Snapchat, Colton.Burt, COLTON.BURT. Shoot me any questions there too. Otherwise, shoot us an email. Hopefully you guys enjoyed this. We'll have Scott back on. Thank you for having us. Thanks for letting us use your place. So
absolutely. Thanks for having me on.
Thank you. Have a good one, guys.